Hey, this is Nitin. Welcome back. So this is my third video. We did a video, first one on how I bought 20 homes as an investor, right? On still doing W2 jobs. And then we did a follow-up Q&A. I met a lot of people and did another video of their top questions, right? I hope you have followed those on my YouTube channel. And we're doing the third video now. The market is very interesting. So I thought of making a video of, who should buy in next 6 to 12 months. People who are in the market, the primary buyers, the investors, who should buy, and then finally following up with what I'm trying to do. I met my goal of buying 20 homes, what I'm doing next. I am at Las Lucas Village. This is in Spicewood, Austin, Texas. And believe me or not, this is the next step which happened more quickly than I thought. Where we are not only buying this stuff, but we also bought the land to start the construction plant. So I just want to talk about these things with you guys. Let's start with the primary buyers. So as I normally look at one of the metrics, which is like how many available homes are available in the market, right? In Austin, I look at a 25-mile radius from a point of contact and normally see the inventory. The inventory honestly has come to a point where it is pretty much on a high end, compared to last couple of years. Let's say at the same time around 2,000, 3,000 homes are available. Right now close to 5,000 to 6,000 homes are available in that 25-mile radius. So basically the inventory is high. But if you're in a good area, good schools, your houses are selling very, very quick. 30% of the people in US are holding properties below 3% mortgage. So those are not selling, So what as a primary buyer you should do? For me, personally, this is a golden ticket for primary homeowners to buy a house right now. Basically, a lot of builders are giving seller credits for next 2 years, doing a 2-1 buy down program, where basically for first year, second year, third year, even sometimes third year, they're giving you a low mortgage rate, right? So what you need to do as a primary buyer is look at good areas, good builders, good opportunities, where the market has come to a point where it is like 15, 20, even sometimes 30% down from the peak of 2021, 2022, and go in and buy. This I would say is a golden time for primary homeowners to buy a primary house as per as their choice, which was not happening in last 2 years in Austin. So builder is covering your bet for next 2 years by giving you a 2.99, 3.99. Almost so much of seller credits, flex cash to cover your closing cost. Options as well, some of them. So use that opportunity at this time and buy. If you don't want to buy a new build house, what you need to do? Basically, I don't know, a lot of people are not aware of this. Loans are assumable. What I mean to say is you can assume some loans, not all of them, but few of them. So if you're buying a resale, check with the seller. The loan he has is assumable or not. Can you take it at the same rate that he has with some, fees, which some loans will do, some will not. Look at those properties if you're buying a resale property. A lot of people are aware of this. So I'm just sharing a tip that when you're looking for resale, look at that. My first preference is always go with a builder, because builders have their own mortgage company, own title company, right? The sister companies which they're dealing with. So they control more. So for primary people, this is a great time. Lot of spec homes were available in market, and those homes you will get the best deal. They are sitting on builders, to sell. Generally what I've seen is builders build the houses on LLCs. Each house has an LLC, has a commercial loan, and they are sitting it for them for almost 9 to 10%. And they don't want to hold those properties. So they will give you the best deal to do that part. As a realtor as well as an investor, this year I have done 50 contracts. Believe me or not, 35 of them are almost closed. I closed almost 5 houses last weekend. So I have pushed my clients to go to certain builders where they are doing this. So that's how primary folks can afford a mortgage, which is as good as they were getting 2019, 2020, right? And then they can still get their dream home with a lower price. So let's cover about the investors a bit as well. So I'm just showing this property a bit more, right? This is again the Las Lucas project in Spicewood. That is the lake, and that is the property. We are in the contract, actually 6 townhomes and opportunity to build 8 more here, which we are going to build, right? as we go along this journey. So coming back to investors, right? I'm a very investor-friendly realtor. I'm an investor myself. You guys already know, right? That is my hip pocket skill. So if I'm an investor right now, if I'm buying a property, the rates are in 7.5, which is making it very difficult for rent to mortgage. So be smart. Look at still the builders, which are very few available, who are giving you this, seller credits to do the buy downs of the rates. There is a cap of 2% for investors in Texas to get from anybody, realtor, builder. But some people have come out with, workarounds legally to give seller credits. So I have done out of this 50 deals this year, almost 40 of them are investment deals. So I have figured out a list of builders whom I can work with, or even if you go to resales, work with your, seller to give you the buy downs as a seller credit and manage it out. So that still you can do rent to mortgage even and buy these properties. So think about this. For example, I bought a home, which is my 23rd home, this 7th of this month, right? We closed it. That property is around 450K and the mortgage which I'm getting right now is around 5.5%. That brings the property to around 2,700, 2,800 mortgage, and my rent is around the same part. But if I would have got it for 7.5, the normal rate right now, my mortgage would have been $3,500, and I would have made a loss of around $800 on that property. So it does not make sense. Very important for you to have always your future opportunity to buy, right? So you should make sure that your debit to income ratio should still work around with the properties you're buying, because only 75% of your rental income you can count as in your debit to income ratio. I think I told it in my first video and second video more in detail about this part. So keep that in mind when you are an investor buying properties. So I did this math and took that property with all the seller credits the builder gave to me, almost 8%, to buy down my rate from 7.5 to 5.5, which makes my property work. That was my 23rd property I bought, and I have been able to work with 3-4 builders like this year to make it work for all my clients, right? So look at those properties, look at the stuff which is, where you can negotiate with the seller for a buy down in terms of seller credits, and then you can go outside market and take a loan which is like 2-1 buy down, that part. So that will work around. All these properties you buy right now, hopefully 18 months down the line, the rates will change. It will come down to normal rates. It won't go at 2 and 3, but at least it will go down to 4 and 5. And slowly, this is a cycle. 2012, I bought a first home, 2.35. 2019, I bought my second primary home, right? When I upgraded myself, again 2.25. That cycle will come around 2025, hopefully again, where we can refinance all our loans. If the property appreciates really, really well, we don't sell it cash out or we sell it. Depends on what needs to happen at that time. Use that opportunity. So invest with that thinking of mind, that you buy a property in a good area right now as an investor, still make rent to mortgage even if you can find properties where you think it is very, very good. You're getting at a cheap rate, 100, 200K off, like 20-30% off from the peak, and it will go up 100K in 1 year. Go for it first with 7.5%. But if you want to just be safe, buy properties where there is a lot of opportunity in south side of Austin where you can get properties like this, right, which makes rent to mortgage even. So look at those, explore those. So that is my suggestion for investors.
So basically what has happened is, in last 6 to 8 months, the rates have gone up by almost 3 to 4%, from 3%, 3.5% to now 6.5%, 7% or more even for investors. For every 1% increment in US, 5 million people in US are not eligible to buy anymore, right? So what has happened? 20 million people have gone out of market. So in 2-3 years down the line, or maybe more, the rates will come down and these people will be eligible to buy. So we'll end up in a situation where, there will be more people pool, lesser inventory to buy, and automatically this will push the rates go higher. So what a smart investor will do is, will use the opportunity right now to buy when there is less people, more supply available, so the prices and the best deals can be availed.
So just want to give a couple of minutes of, I think since we have started connected on this, and this was always I planned to do, but luckily with some of my friends, this has happened. So we are in Las Lucas subdivision in Spicewood. This is a 5-acre subdivision, and the builder built 6 townhomes. And luckily we got an opportunity to buy this 5-acre with, on 2 acres 6 townhomes are already done, and on 3 acre we can build more. So that's what I wanted to do. So we are going to start building. right? Hopefully in 1 or 2 months we are going to close this, and then we are going to start the construction part. So look for opportunities at this as well at this time, right? The market has come to a point where you can get great deals, not only in a residential but other places, commercial. We are going to do Airbnbs in this. This is on lake, so in future if you want to book a great Airbnb, you can come back and connect to me. I'm going to post a link of this Airbnb whenever it's live below this video as well in my channel. I have a couple of them in downtown as well. So think about this, manifest what you want to do. And my thought was to buy 20 homes, start into construction. I'm working on property management company as well, which will be up and running in 1 or 2 months. Right now, almost all my investor clients' properties I'm just managing and supporting best to my ability, right? So do that more professionally, more organized as well. So that's it. It's a great time. It's a great time in the sense Austin is a great place. Forget about other things going on across. Look at the place you are in. So Austin is a great place. I have full confidence on this, that if you are able to survive this 1 year, 2 year as an investor, right? Sometimes you're over leveraged on all this stuff. Your buying property taxes has gone up. You can survive for another 1 year. As the rates go down, these prices will go up, and then you can make a decent equity on all your houses. And then you do what you want to do. Cash out, take the money out, do investment again, or sell the house. So I'm suggesting people not to sell right now unless there is, a situation where they have to sell. Hold it out and look for right opportunity, right? And follow my channel. I'll keep posting more real estate videos, more informational videos about real estate, how to do real estate, right? Maybe I'll post something about how to look for a closing disclosure, how to look for an appraisal, how to look for an inspection report, all this good stuff, which when you buy a house, you look at it, right? I think how to do your finances. I talked about it in my previous videos a bit, right? How to find a property also in Austin. I talked about a little bit in my videos a bit. And you can always connect back to me, talk to me for any Q&As. Ping me out, reach out to my Facebook page, my Instagram account, or my YouTube channel, and we can happy to connect. I met almost like 50 to 60 people in last 2.5 months on a coffee or this stuff, right? So thank you so much.